Hey everyone, welcome to this explainer. Today we're going to be completely stripping away all that crazy noise to look at the historical realities of US wealth building. You can totally forget those flashing red and green tickers you see on cable news. Today we're breaking down the actual core mechanics of how real generational wealth is quietly secured.
So let's kick things off with a pretty crucial question. Do you know one of the absolute easiest, most statistically proven ways Americans actually build wealth? Now, I know it kind of sounds like the setup for some complex elite scheme, right? But the answer, well, it's actually remarkably straightforward.
It's the stock market. I mean, it's really not this exclusive VIP club. It's quite literally the fundamental growth engine of the American economy. Seriously, once you strip away that intimidation factor and just look at the core mechanics, it transforms into an incredibly powerful tool for your financial leverage.
All right, let's jump right into Section 1, the ultimate wealth secrets, seen through the daily chaos. Okay, so the big secret here really lies in the stark contrast between noise and trend. Sure, in the short term, the market looks like a terrifying, chaotic roller coaster of entirely unpredictable swings. But, and this is the key, when you zoom out to look at the long-term reality, all that crazy chaos basically flattens out into a consistent, undeniable upward trend.
Moving on to Section 2, the power of small. Because, spoiler alert, you don't actually need to be rich to start.
It's true. You don't need some massive inheritance or a crazy six-figure windfall just to get your foot in the door. The data absolutely proves that successful investing is rooted in the discipline of consistent, manageable contributions. We're talking about starting with just $100 a month. Seriously, that's it.
Now this right here is compound growth in action. That $100 a month, it doesn't just sit there twiddling its thumbs. By your second decade, your returns are literally generating their own returns. It's like a snowball rolling down a hill. By the third decade, those small, steady contributions have mathematically snowballed into some very real substantial wealth. Time and consistency, those are for sure your greatest multipliers.
And to really ground this whole process, let's remember what you're actually acquiring. Buying a single share, it isn't gambling on some abstract digital concept, and it's definitely not like buying a lottery ticket. You are acquiring actual equity. You're taking real ownership in a living, breathing business. So when the companies that are out there driving the American economy grow, well, your equity grows right alongside them.
So let's get into Section 3, the long game. This is all about shifting your investment mindset.
There is a pretty profound psychological divide in how people actually approach the market. On one side, you have this exhausting, super frantic attempt to predict every single daily price movement. But on the other side, you have the disciplined focus of long-term investing. The most successful investors out there, they just don't waste their energy trying to outsmart the daily noise. Instead, they anchor their psychology to that historical upward trend we talked about earlier.
Now, this long-term mindset really relies on three foundational pillars. First up, patience. That means riding out those short-term dips without completely panicking. Second is consistency. You need the discipline to just automate those monthly contributions year in and year out. And third, learning. You've got to continuously educate yourself on exactly how your capital is working for you.
Our source material honestly distills this perfectly with a great quote. Smart investing is about patience, consistency, and learning, not getting rich overnight. I love that because it's the ultimate reality check against all those chaotic get-rich-quick myths that completely flood social media these days. Real, true wealth building, it's just a quiet, very deliberate process. And hey, to maintain that third pillar of learning and keep arming yourself with this kind of empowering, grounded information, the source text highly encourages subscribing to Fact for Knowledge. It really is the absolute best way to keep all these vital finance facts front and center in your life.
So, as we wrap up this explainer, I really want to leave you with a final thought-provoking question. Are you going to keep waiting to somehow get rich overnight, or will you start building your wealth with patience today? You now have a crystal clear view of the machinery, completely stripped of all the hype. The historical trend goes upward, compound growth is absolutely real, and the barrier to entry is literally just consistency. The only variable left is when you decide to apply it.